Hi friend, welcome to the Company Law Adjudication and Appeal Series. Today we are discussing Pune ROC adjudication order for the violation of Section 42 of the Companies Act. There are three default in this case. First, there is the not depositing application money in the separate bank account, and second, there is the non-filing of the return of the allotment within the prescribed time period, and third, there is the utilization of the money before allotment of the uh, securities. Let's see the adjudication order copy. The company name is the Cookie Jar Technology Private Limited, having registered office at Pune, and Pune ROC appointed as the adjudicating officer, and relevant provision of the section given here, section 42 subsection 4 of the Companies Act, that the every identified person willing to subscribe the private placement shall apply private placement and application issued to such person along with the subscription money either by the check, DD or banking other banking channel, and not by cash, and company not utilize money raised to the private placement unless allotment is made and return of allotment is filed. And company making an offer or invitation under this section shall allot a security within the period of the 60 days from the date of the application money, receiving of the application money, and in case of the failure, then in that case repay the application money to the subscriber within 15 days from the expiry of the 60 days, and the fails to repay the application money within the prescribed time period, it shall be liable to pay the money with interest at the rate of the 12% after expiry of the 60 days. And this subsection proviso provide that the money received on an application shall be kept in a separate bank account in a scheduled bank and not utilized for any purpose other than the adjustment against allotment of security or for the repayment of the money where the company is unable to allot securities. And subsection 8 says that a company making an allotment of security shall file with the registrar a return of allotment within 15 days from the date of the allotment. And subsection 9 says that if the company default in filing the return of allotment within the prescribed time period, its promoter and director shall be liable to penalty for each default of 1,000 rupees for each day during which such default continues but not exceeding 25 lakh rupees. And subsection 10 says that if a company makes an offer or accept money in contravention of this section, in that case company is promoters and director shall be liable to penalty which may extend to the amount raised to the private placement or 2 crore rupees, whichever is lower, and company shall also refund all the money with the interest specified. In this case, facts of the company has made suo motu application with complete application and further submission in respect of the allotment of 666 equity share of rupees 10 is at a premium of 11,245 each to the Clayfin Technology Private Limited, a private placement offered by passing a special resolution in AGM held on 21st August 2020. The investor had applied for the said shares and remitted 74,95,830 to the company and three tranches on September 16, 2020 and September 18, 2020 as share application money to the existing current bank account of the company, not opening separate bank account. The company allotted this shares to investor by the resolution passed by the board in their meeting held on the 20th October 2020, which is well within the prescribed time period line of the allotment of 60 days from the date of the receipt of fund. Post allotment, the company filed a return of allotment in form PAS 3 on December 7, 2021. As a condition, subsequent to investment, the investor appointed a nominee director on the board of the application with effect from 18th October 2021. Here, company was unable to comply the following provision, that is opening of the separate bank account for receipt of private placement share application money, filing of the form MGT 14 before circulation to the private placement and letter of offer letter and within 30 days from the date of the passing HR for issue of securities on private placement basis and filing of the form PAS 3 within 15 days from the date of allotment. The management inadvertently failed to adhere the site provision on account of following reason: lack of expert knowledge and awareness about the company's act, non-routine nature of the corporate action, and urgency of investment and outbreak of COVID-19 pandemic. In view of the facts, company inadvertently failed to comply the provision of Section 42 of the Companies Act. And reply submitted by the company, that is the company, stating that being an NBFC AA required to approval of the RBI to commence the business, and as a capital minimum net worth requirement, that is 2 crore before applying the to RBI for registration as NBFC. The company received investment from the investor on 20th October 2020 by way of private placement. Due to the embryonic stage of the company, management was still in the process of gaining detailed knowledge of the compliances required for the issue and allotment of the share. Thus, director of the company did not have legal knowledge or awareness in the infant stage with nil revenue or recruit competent professional to handle its legal and secretarial work, inadvertently resulted in non-compliance of the various provisions of Section 42 of the Companies Act. Further, at the time of placement in 2020, due to COVID-19 pandemic, which had caused considerable disruption in the functioning of the companies, and banks employees were working from home for safety reasons, considering the urgency of the funding requirement of NBFC registration, the management obtained the fund in their existing current bank account maintained with the ICI Bank. Furthermore, subsection 4 of section 454, with the rule 353, rule 5, notices were given an opportunity of to be heard by issuing a notice to appear before the education authority to virtual hearing on 18th January 2023. Director of the company appeared before the educating authority to virtual hearing and submitted that pursuant to section 42 subsection 6 of the company, if a company fails to refer the application within the prescribed time period within 60 days, it's liable to repay the application money with interest of the 12%. And hence the company is not liable to repay the application money received from the investor. And subsection 10 of section 42 is applicable to the extent of the monetary penalty only and not for the refund. Further, they informed that the investor has submitted its no objection for non-refund of the share application money duly signed by its director. Further, they informed that the intent behind the definition of official default is to identify the person involved in the transaction and who has defaulted by not acting as in the best interest of the company. Further, the definition stresses on the word official of the company. Thus, a person would be an official in default in his individual capacity and not considered as a separate individual because of his dual designation. Hence, they are requesting that the promoter and director being the same individual and liable to for penalty in their individual capacity and not in dual designation capacity. Further, company has requested to the education officer that considering the low capital and turnover, recently initiated business activity and new business concept to levy minimum penalty on the company and its officer in default. And hence, considering the factors taken into the account by the execution officer, that the size of company, that's paid up capital 1,47,410 and turnover 10,70,210 as per the ROC record, and nature of business carried on by the competent company related to information technology driven and NBFC, injury to public interest non, and nature of default non-compliance of section 46 subsection 6 of the Companies Act. Reputation of the default is no, and the amount of disproportionate gain or unfair advantage where quantifiable made as a result of default as non and amount of loss caused to the investor or group investor or creditor as a result of default in non and company files suo motu adjudication application and investor has willingly given its NOC for not receiving any refund and company is a small company in terms of section 2 clause 85 of the Companies Act and in this order considering the factors given here and applying section 446B of the Companies Act, that is this overriding on other provision of the Companies Act, that is in case of the penalty payable by for non-compliance of any of the provision of this act by one person company, a small company, a startup company, producer company. Hence company here company is a small company and any official in default or any person in respect of such company, then such company and officer in default, such person as the case may shall be liable penalty which shall not be more than one half of the penalty as specified in section, subject to maximum of 2 lakh rupees in case of the company and 1 lakh rupees in case of official default on other person as the case may be. That is the maximum cap given in the section 446B, that is the 2 lakhs on the company and 1 lakh on each on the official default. And as per the MC record, this is a small company and considering the factors of the case, here penalty is imposed. First, there is the penalty under section 42 subsection 10 of the Companies Act for not opening separate bank account. For this penalty imposed as per the section of the Companies applying section of the Companies, that is the amount of the amount involved in the private placement, that is 74,95,830 or 2 crore, which is lower, that is 74,95,830 is the lower amount is imposed on the company and official in default, 3 official in default also 74,95,000 and by applying section 446B, that is the maximum cap on the company is 2 lakh and 1 lakh each on the official in default. This penalty is reduced to 2 lakhs on the company and 1 lakh each on the director from 74,95,830 on the company and official in default. And for not filing return of allotment, there is a delay of 397 days. There is the 1,000 per day penalty is also reduced to the by applying the provision of section 446B of the Companies Act. This is on the 2 lakh on the company and 1 lakh each on the official in default. And for utilization of money without filing a return of allotment, here maximum penalty also imposes the amount involved in the private placement or 2 crore which were lower, that is 74,95,830 on the company and 74,95,830 is on the official default. And there is penalty reduced under section 446B is 2 lakh on the company and 1 lakh each on the official default. And ROC opinion that penalty so imposed is commensurate with the aforesaid failure committed by the noticee, and notice applicant shall pay the penalty so imposed to the Ministry of Corporate Affairs portal and appeal if any prefer then file appeal to the regional director of Eastern region within 60 days from the date of the receipt of this order in form ADJ stating setting grounds of the appeal and shall accompany by certified copy of this order. Thank you so much for watching this education order and understanding the severe penalty provision under section 42 of the Companies Act, that is the failure to comply with the provision of section 42, that is the private placement. Thank you so much for watching this update.